that asset allocation, we look at it on a net basis. So if that's a little complicated, it shouldn't really be. That's how a hedge fund runs money. That's my background. That's where I come from. So we have longs and shorts. So when we think of a position, we think of it on a net basis. So we'd be net long, really the two big buckets of asset allocations, are our two favorite buckets. And I'll just go to the board here quickly, are really U.S. equities, we like those, and foreign currencies. Those are our two favorite buckets from an asset allocation perspective. And the way that we reflect on what we don't like or take down the net exposure by shorting things, we have a bucket that we call our favorite shorts. So if you look at that, expressing it in ETFs, for example, my favorite ETF this morning from, again, I like to think about what happened yesterday matters. So we had oil and gas, oil itself, all for sale yesterday. So XOP is our favorite high beta way to play energy stocks in particular. If you want to buy oil, you can buy USO. That would fit in there as well. And then right here, our favorite currency continues to be, this is the ETF for the US dollar, or the bullish position in the US dollar. So that's UUP. Our second favorite currency is still FXB, which is the British pound. So those are four long ideas that we'd have this morning from yesterday's closing price, in as much as ways that we take down our net exposure, again, shorting things against your capital. I think most people know how to do that. If you do it in your account, you'll see what happens. But again, on this basis, we'd have things like gold shorting it today, shorting TLT, which is treasuries, and shorting FXI, which is China, big cap China stocks. So I'll be talking about these things. First, I'm going to go to the wood, which is, of course, our top three things every single morning. First, we do asset allocation, which includes stuff like that, i.e. what to do today, and the next day and the next day after that. But what we're really trying to do is provide you the context within the intermediate to long-term setups in macro. And again, that's the next 3 months to 3 years. This is the immediate term, but again, every day we presume that you pay attention to markets because you might do something today. Being immediate term doesn't mean you're short term, just means that you're doing your job. So again, immediate term is how we make decisions. Over the intermediate to long term is how we contextualize those decisions.